Hi traders, Nathan Bray here from ACY Securities. Heading towards the end of a trading week, let's take stock of where we're at right now. So very quickly, there is now a global banking crisis. Now we had the US dollar being heavily affected to start off with. There's some weakening going on. Their banks got bailed out by their central bank, in effect going from a tightening stance, a very staunch tightening stance, to fight off inflation, now to providing some easing. That could very well feed inflation, but they needed the liquidity to help out the banking system. However, across the other side of the world in Europe, even bigger banks, one might argue, are also being bailed out by their central bank, stopping their tightening area and adding lots of easing in the form of bond purchasing, etc. in Europe. So we're in this situation where the market is dealing with a global scenario. Therefore, one isn't really being favored over the other. So what we've got right now is this consolidation period. We've got a sideways kind of movement happening in a whole variety of different instruments. Even stocks are trading in a range. We're looking at the euro dollar, the pound dollar, but more importantly, let's talk about this dollar index. So this dollar index is trading in this range. However, if I look at the longer term trend on the dollar index, the trend is still up. This 101 level is still holding. It has become support on the weekly a couple of times. So it may very well be that we revert to the longer term trend if both sides of the banking crisis are being assisted by their central banks. That being said, I want to give you a warning. When the market is consolidating, is trapped inside this sort of range of uncertainty, keep in mind that data coming out, whether it be good or bad, can be very volatile in the market. So whether you're choosing to take advantage of that volatility by knowing what you believe the data might be coming out as, or whether you're choosing to stay completely away from those news events due to that volatility, they might be two good options that you choose one to employ in your trading at this stage. Now, as I mentioned, I believe this longer term trend could be coming into play. At the moment, we're also seeing this dollar index maybe putting in a higher bottom. So this range at this point could be reverting back to this longer term trend. Now, for a complete breakdown, technically, of what the dollar index is doing, I'm joined by our own senior market strategist, Duncan Cooper. Hi, Duncan.
Hi traders, just want to give you a higher level look at the dollar index today. Now, on the dollar index, we could be forming the first higher bottom here after this decline. We've got a fib drawn in from the weekly low up to the weekly high here, shown on the day chart. So if you trade above yesterday's high, today we're going to actually form a higher bottom here. So I'll just draw it in for you. We've popped up here, we pull back to here, and if we have a day up today, we're going to start to form a higher bottom. Is that the starting point for a new uptrend on the dollar index? So with that in mind, we're at the pull back to the 79% level of that weekly range. We're maybe starting to get support at the 62% level. Are we now going to form a higher bottom today for a move back up? If that's the case, we're going to see the inverse relationship forming on the pound dollar and the euro dollar.
Traders, there isn't a lot of data coming out that could affect the markets drastically, which is why we believe it could be sitting inside this technical range in the market. So we've got some core PCE data, the preferred Fed data, coming out on the US as well as their GDP, and we've got some German CPI coming out on the European side. Next week, however, things are coming to life just before Easter break, and that's going to be big. We've got US NFP, non-foreign payroll data, which could really rock these markets, along with various central banks coming out with their interest rate announcements.